So you sit there and, because of the work we do, we look at other assets, uncorrelated, the rest of it, assets that don't have the ability to be debased, and think, is that really, capital appreciation that you're seeing, or is that a currency debasement? And personally, I would think it's a currency debasement, not principal appreciation in an underlying value of a property.
Yeah. I mean, I totally agree. But the debasement doesn't include inflation. Is that your understanding as well?
I agree with that.
So you've
that
got
is
to
just the
add
monetary units.
Yeah, so that's the central bank issuing or debasing debt to equivalent of that level.
Yeah.
Let's say 7 or 8% a year. Then you've got to add inflation on top of that. So let's call it 7% plus 3%. So 10% purchasing power.
Yeah.
You're losing every year.
Yeah. And how I look at this in two very simple terms. If you look at a transaction, basically somebody is selling something and somebody's buying something. So in your example, the debasement happens to the money.
Yeah.
And the inflation happens to the asset that you buy.
Yeah, that's a good way.
But you need to add those two together in order to get the total debasement or inflation, or debasement plus inflation that you look at. And we're running at 10 or 11%.